On this edition of Next Africa, we explore the companies shaping the continent's future as Bloomberg unveils its inaugural Africa Startups to Watch list. We talk with some of the up-and-coming business leaders driving the charge. Also, we travel to rural South Africa to find out more about the agri-tech company connecting livestock farmers to global markets. Plus, thousands of political and business leaders converge on Abidjan for the 12th annual Africa CEO Forum, which aims to bring the public and private sectors together to help deal the continent a winning hand in an increasingly transactional world. And welcome to Next Africa. I'm Jennifer Zabasaja, and this month, Bloomberg launches our inaugural 25 African Startups to Watch list, and we're taking a deep dive into the startup scene across the continent. Now, the tech startup ecosystem across Africa showed strong resilience in 2024. Global technology investment firm Partech reports $3.2 billion of funding for last year. That's across over 500 deals. But venture capital investing in the region has slumped since 2022. Fintech still dominates, attracting 60% of funding, with Nigeria leading the charge. Across the continent, startups face macroeconomic headwinds such as currency devaluation and high interest rates. Yet, in the face of shrinking funding, the ecosystem is maturing. Interest in sectors such as clean energy, insurance, and logistics are all being driven by the need for scalable solutions within countries experiencing rapid population and economic growth. Now, the UN has looked to boost new business through initiatives such as Timbuktoo and Africa Influencers for Development. I spoke to the UNDP's Africa Director, Ahunna Eziakonwa, who spearheaded that program, about what needs to be done to further boost entrepreneurship on the continent.
It's doomsday, if you like, for development programming and development financing, because for regions like Africa that are still in the middle of their development journey, the current global environment is quite hostile in terms of generating sufficient financial means to deal with all the development challenges. So this is quite a serious moment for development, because development funding is drying up, for one. But also the geopolitics and globally the issues around trade having a negative impact on actually boosting global growth, which eventually means growth everywhere else. So no, it's a moment to behold in terms of shifts in the wrong direction.
Well, and that brings me to Timbuktoo. Can you talk about the work that you are trying to do in terms of innovation and empowering local entrepreneurs? How are you operating in this environment, considering the challenges, and still being able to drive some of the innovation that you speak to there?
Well, we think actually that private sector is the direction that we ought to go with the overall decline in development financing. ODA has gone down sharply, but Africa has not fully leveraged the private sector. And by private sector, I don't just mean big corporates. I mean small, medium enterprises and startups. And actually, UNDP was put on notice about the potential we have, the opportunity we have on the continent, when a few years ago we saw the emergence within a very short period of time of 6 unicorns and an explosion in the startup space, with investors actually taking notice of that opportunity on the continent. Now, we saw the startup industry in Africa growing 6 times more than the global average, and that really caught our attention. And also the fact that the space was occupied by mostly young people. And these are the ones that we worry about, because on one hand, Africa has a lot of young people. On the other hand, the opportunities are few for them to actually apply themselves. So the startup ecosystem was emerging very fast as a place to invest. So UNDP decided to establish Timbuktoo, which is the largest initiative in the world to support the Africa startup ecosystem, to do 5 things. One, we wanted to solve this the early stage risk capital gap. So although there was a lot of investment coming into startups, VCs were shying away from early stage because of the perceived risk. And yet we know that you need to grow a healthy pipeline for investors to be interested in. So Timbuktoo's first objective is to really bring enough capital to bear on solving that early stage risk capital. The second is actually dealing with the whole fragmented ecosystem. What we found was that there was a lot of interest, but there was no coordination or coherence around it. So Timbuktoo is generating this ability for us to concentrate, to converge support, diverse support channels in one location, and also to solve the sort of sector-specific issues. And of course, the idea that you really need to go Pan-African, the One Africa market, the Africa Continental Free Trade Area, has been launched. And startups need to be able to cross borders, to have greater ease at operating beyond their borders. So we're also bringing policy to bear, regulations that stimulate enterprise rather than stifle them. So that's, Timbuktoo has a policy impact team that is working on issues to do with Startup Act, startup regulations that will just ease the issue a little bit. And finally is this idea that we need to bring universities on board. And Timbuktoo wants to address the middle, which is growing gazelles. Those startups that will scale fast and become companies that are actually employing a lot of people.
The startup space is just one area private equity will be keeping an eye on. Let's bring in Genevive Sangudi, partner at Alterra Capital Partners, a private equity investment firm, and Bloomberg's Lonnie Prinsloo, who covers deals, tech, and M&A on the continent. Lonnie, let's just start with you. 2024, we saw a deceleration in investments from prior years. How is this year shaping up?
Yeah, so actually in 2021, 2022, we saw quite high valuations, and then we had a bit of a correction in the market. That's what you saw in 2023 and 2024. What happened consequently in 2024 is a few big funds were raised specifically for Africa. One of them was Genevive's Alterra fund that's going up to $400 million, and she managed to pull quite a lot of interest from billionaires like Sangudi, Carlyle founders. Abidjan raised a fund of $470 million. We're seeing Helios targeting quite a large fund of around $800 million. They haven't closed yet. But consequently, what then happens, if you close those funds, you have to deploy the money.
Yeah, Genevieve, jump in here. I mean, what are you seeing from your vantage point?
So, Jennifer, I just came back from Lagos about 2 weeks ago, where the African Private Capital Association was hosting its annual meeting. 800 delegates from around the world, both from the continent and globally. So we're talking institutional investors, development finance institutions, GPs, as well as LPs. And what was really also interesting was that we had a lot of domestic investors. So you had pension funds, sovereign wealth funds, et cetera. And what I can tell you, I've been doing this for 20 years, and the optimism in the room, the energy in the room, the renewed focus on actually working hard to deliver risk-adjusted returns for Africa that would be globally competitive was really, really palpable. So in terms of deal activity, if I even look at Alterra, over the last 18 months, we have closed 4 transactions. We have 3 more transactions that we are actively working on that we expect to close this year. So I think, just looking on, Q1 this year versus last year, I think we've already reversed that trend in terms of deal activity. And as Lonnie said, some of our well-respected peers and competitors are raising massive funds, so we expect to see them in the market. I think that there's still significantly more demand for capital than there is supply. So I don't hope that prices will be driven up as a result of that, but I hope we're all just going to invest wisely and continue to make Africa an attractive investment destination for global capital.
But when you look at some of the data points that are out there, and in particular what caught my eye is the investment to exit ratio, right? That is still quite low if we take a look at the other parts of the world. How does that factor into your sentiment right now as an investor, especially when you're looking at the startup and the entrepreneurs and the companies that are out there to invest in?
Jennifer, that's an absolutely accurate point, and it's something that has to be resolved. So Africa has suffered from a dearth of liquidity and a dearth of exits in the private equity and venture capital space, and that is part of what has made sort of, capital flows into the sector lower than they should be. However, it's a big continent, right? 54 countries, very different macro, social, political dynamics. If you look at just the data in terms of the number of funds that the African Private Capital Association tracks, it's something like 450, which just imagine how broad a spectrum that is, right? So if you look at the macro numbers, I see why that makes sense. However, if you look at top decile managers, I think the trend then looks very different, which I think is how we need to dissect the data as we look to present Africa as an attractive investment destination. And so I think the lesson for all of us here should be buy good companies, maintain pricing discipline, be a very value-added, hands-on investor. And from an Alterra perspective, we find that it's easier to exit control investments. You're in control of your destiny. You are able to do ESG and tech transformation, which I think makes companies more sustainable, more resilient, and more attractive to, global strategic players and financial investors.
And some of those points that you brought up there, Loni, tech, sustainability, scalability, I mean, those seem to be a lot of the describing factors for the unicorns that we see on the continent, which are quite small. Is your expectation, based on your reporting, that we'll see more unicorns in the near term in 2025, or is it shaping up to be a few smaller companies that are maybe more scalable that we'll see arise?
So in terms of unicorns, as I sort of previously mentioned, we had some big ones come through, mostly from Nigeria. We had a flutter wave at those high valuations that we talked about previously, backed by a lot of US money and so on. What we are noticing, or sort of as I do the reporting going along, we are seeing some South African companies building a bit of scale. We saw Time Bank recently become the first unicorn actually in South Africa. There's some other payments companies that are doing well, maybe not quite yet at unicorn. Zao might make it this year, next year.
Wow.
So not many unicorns, but companies are definitely building scale. We recently did 25 African startups to watch, so that's smaller scale. But it was very interesting to go through the data, and between some of them, they are planning smaller raises, but that's how you build your scale. That's where it starts. And then Genevive comes in at a later stage.
We're going to leave it there. Thank you so much to Genevive Sangudi, a partner at Alterra Capital Partners, and also Bloomberg's Loni Prinsloo, who covers deals, tech, and M&A for us here on the continent. Now, coming up, we'll take a deep dive into one of Bloomberg's African startups to watch and look at how a South African company saw an opportunity to connect livestock farmers with global capital. But first, Koolboks is a solar refrigeration company operating in Nigeria, which also made our list. CEO Ahunna Dominic shared more about the inspiration behind his startup.
We have this huge problem in Africa. We've always been hearing about let's light up Africa, let's light up Africa. But rarely do you hear people talk about let's refrigerate Africa. And that's the problem we're trying to solve. So about 2.5 years ago, we created a solution using the forces of nature, which is the sun and water. We are able to generate refrigeration using the sun and water. And the good thing is we're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. And the question is, of what good is the technology if no one can afford it? So looking at the peculiar nature of the people we serve in Africa, we integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
So Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. The gap in products is huge. There is very little choice that is affordable, high quality, effective, nourishing, and safe. The second gap that we identified was actually knowledge. It's actually bigger than the products gap. We started in Kenya with one product category and about 1,000 Instagram followers. Today, we are sold across 6 African markets, Kenya and Nigeria being our big hubs. We have 14 products, and we have a community of 250,000 women, that's social followers and email subscribers that are consuming our content.
That was the founder of Uncover, another one of the companies profiled on Bloomberg's Africa Startups to Watch list. Now, from cosmetics to cattle, Swiftvee is an agritech company connecting livestock farmers to global markets. I visited rural South Africa to see what it's all about.
4,250 inside, all done.
That's the sound of antelope being sold at auction. It's big business in South Africa, where more than 20 million large wild animals roam on private land around the country. Everything from buffaloes to warthogs are bred and traded. The country's thriving wildlife auction circuit means today they can fetch up to $1 million each. It's a key piece of the industry, drawing interest from far and wide. Even President Cyril Ramaphosa, who's bid over $1 million for a buffalo. The government hopes auctions may help boost black ownership, currently just 3.5% of the wildlife sector. It's also creating markets for rural farmers, which can support prices. For centuries, farmers have relied on live agriculture auctions like this to buy and sell livestock, but technology is revolutionizing the way that they do it.
If they can do auctions online instead of driving to the auctions, that will save them the cost. And that's why we look into technology as a way of enhancing the whole value propositions that we offer to farmers.
Russell Luck is the founder and CEO of Swiftvee. Swift refers to the global payment system, and Vee means livestock in Afrikaans. The app matches buyers and sellers of livestock anywhere in the world. His team traveled to remote auctions across Africa, fielding online bids alongside those over the phone or in person, making it a far more competitive scene. At the conclusion of this auction, for example, half of all wildlife went to online bidders. And if you're a winner, another company will help get the animal to you.
We're working with key banking partners in order to open up a whole range of fintech, insurtech, and data solutions, which will empower farmers to sell at higher prices.
Auctioneers say sales have grown almost 800% since apps such as Swiftvee started. Luck has raised over $2 million in venture capital and from other sources, including the Bill and Melinda Gates Foundation. It's also been recognized by the United Nations. Swiftvee is now eyeing the U.S. market, where Luck hopes growing interest in his auction app will turn into a stampede. And the company says it's able to help more than 249 million women in Africa who keep livestock as a primary form of financial security. Enygma Ventures, another firm focused on female-led startups, believes Africa is at the vanguard of women-led initiatives in the private sector. I spoke with Sarah Dusek, founder of the VC firm, as part of our Investing Africa series.
Africa is actually leading the charge in investing in women. Africa has an unusual situation in that 50% of entrepreneurs in Africa are female. More and more funds are putting more and more energy into investing in women and investing in women on the continent. The real shift that has to happen on the African continent is the amount of money being invested. So we're still seeing, sadly, minuscule amounts of capital being deployed on the continent in comparison with other continents. Africa is ranking last in the venture capital stakes.
African business leaders have been wooing investors with the aim of forging a new public-private deal to speed up the continent's economic transformation. This month's Africa CEO Forum brought together more than 2,000 business leaders, investors, and policymakers in Abidjan, the Ivory Coast's economic hub. Among the attendees was Ghanaian President John Mahama. He told me more about plans to encourage crude extraction to avoid the assets from getting stranded amid a global decarbonization push. But Mahama says gold remains key.
Our major exports are gold, followed by oil and gas, and then cocoa. Cocoa used to be the biggest export item for Ghana. I think it's about number 3 now because of a loss of production due to climate change, but it's building back up. And so while oil is gone down, we benefit from the gas, because I think that gas is more beneficial to Ghana than the oil, because we're using gas to produce power. And it allows us to produce power comparatively lower than if we were using light crude oil completely. Fortunately, the West African power pool is operational, and so any excess power we're able to evacuate to Burkina Faso and other countries, and so that's a good thing. But in all the unpredictability of the world, and when the world gets unpredictable, one commodity that increases in price is gold. And there's gold everywhere in Ghana, from the south to the north. In the past, when we were young, when there was a thunderstorm and you went out, you could pick little specks of gold in the gold-producing areas of Ghana.
I need to go to Ghana.
Let's bring in Bloomberg's Yinka Ibukun, who is in Accra for us, another gold part of the country. Yinka, talk about how this year's forum was different to previous editions. I know you've covered this for quite a few years now.
Yes, Jen, this year's forum was really different. First of all, this started really as a small conference in Geneva in 2012 that kind of bridged the investment communities in Africa and outside to do business together. It's grown into this huge event that brought together 2,800 plus business leaders and political leaders. As you just said, you were with Mahama on stage. There were actually at least 7 presidents present for the event, which has grown really from this Francophone affair to this Pan-African one. And it's in fact been called the African Davos. Another highlight was when Ramaphosa of South Africa, President Cyril Ramaphosa, and President Paul Kagame shared the stage, and even pleasantries within a very difficult political context, of course.
Yeah, and Yinka, you mentioned the difficult geopolitical context. We talked to a lot of people about that throughout the whole gathering. What would you say for investors, some of those key takeaways, though, who are, the investors who are interested in the continent, what were the takeaways considering a lot of the uncertainty?
So really, they were all the ingredients for the mood to be gloomy, but actually it was quite optimistic despite all of this. I spoke to a bank CEO, who was saying that he was expecting people to be sharing concerns, and instead they were sharing ways in which they could adapt to the situation. And so in terms of takeaways, one key conversation that came up was, especially for the huge infrastructure projects that Africa needs, was resorting to blended finance, which is basically having development funders de-risk projects so that more capital inflows can come in. That's been a term that's been flowing for quite a bit, but I think, necessity is the mother of invention, and we'll probably see more in that space.
Certainly. Only 2 days, but quite a busy 2 days it was. Bloomberg's Yinka Ibukun in Accra for us. Yinka, thanks so much for that update and for joining us this month. And that's Next Africa for this month. But don't forget our weekly podcast with more of what's happening across the continent, available on Apple, Spotify, and wherever you usually get your podcasts. You can also subscribe to our bi-weekly Next Africa newsletter, available on the terminal and website for even more reporting from the Bloomberg team. But for now, I'm Jennifer Zabasaja in Johannesburg. We'll see you next time.